Thanks so much. And it is hard to believe, but winter is already just a couple of months away. While it's certain that the temperature will drop, many aren't so sure if this could be a wild or a mild winter. Let's get more on that question and what it may mean for the energy markets. Bob Morris joins us, a managing director and energy analyst with Bank of America, along with Brian Hicks, president of online magazine Wealth Daily. Gentlemen, nice to have you on the program. Thanks so much.
Thanks.
Bob, let me get your feeling about where oil is right now. Back to $61 a barrel on crude, nat gas down once again. Is this sustainable, and you think we go lower?
Well, I certainly think natural gas prices could go lower. We're waiting for winter to get the first uptick in demand, and right now with natural gas storage on track to be at the highest level ever going into the winter, we need some demand to sort of support the natural gas price. So certainly wouldn't be surprised to see it go lower. On crude oil, I think the market's looking to OPEC to see when they're going to step up to support $60 a barrel. We're holding a little bit above that, but certainly the market's expecting that with the talk out of OPEC from what was said by the Saudi head today, that if oil dropped below 60, that OPEC would step up to support that. We'll see.
Brian, we know that as oil prices moved all the way from $40 or so all the way up to $78 a barrel, it did impact consumers' ability to spend. We saw the economy really come in from that huge, more than 5% growth rate earlier in the year to just about 2.5%. Do you think we see the similar reaction now that prices have come down? Is this going to help the economy?
Oh, absolutely. I don't think it's a coincidence that consumer confidence is going up when oil prices are going down. You know, it's funny, I went back a year ago and looked at some of my archives and headlines, and last year around June and July we were cursing that oil was going above $55 a barrel. Now we're wishing for it. So I think there is going to be a positive effect to the economy because prices have come down.
Bob, what is the air temperature that the oil and natural gas markets are pricing in right now for the winter on average?
Well, I think right now they're probably pricing in a normal winter. But if we get a warm winter, that's going to put more pressure on both natural gas and crude oil prices.
And how do you get to that calculation? Why is this price a reflection of a normal winter?
Well, you have to look at the demand for both natural gas and for heating oil during the winter. And that's the biggest swing in demand all year is what the temperatures are in the winter. And that can be a very, very big swing on the inventories for both. And that's the reason we have natural gas prices so low today, is that we had a warm winter last year, which left us with a storage surplus coming out of the winter, which we've been trying to work off ever since.
Right. And there was lots of talk about global warming and speculation that global warming was fueling the active hurricane season we saw last year, and that it creates a more benign winter environment. To what extent do the oil traders look at any of the scientific speculation or climatological behavior, Brian?
Well, they look at it, but that's a lot of guesswork. The one thing they do look at, and the one thing that I look at, is I look at commercial buying. What are the utilities doing? And we have seen a surge in buying by the utility companies. When commercials lead, the speculators will follow. I believe that the commercials are thinking that one good cold snap this winter, and you're going to see natural gas prices go back to $7 to $8 per MCF.
So let's talk about the investment strategy here in light of where we are on oil and what you are expecting for the winter months. Bob, how do I invest in this environment?
Well, I think you look to start to step up right here on some of the better quality names. If you look at the E&P or the independent producers here, they're factoring in about $46 oil and about $5.60 gas. That's what the valuations reflect today. So if you look at some of the cheaper names, you look at an Apache, for example, if you assume oil averages $45 a barrel from here forever, that stock's trading at about 60% of net asset value. So from a valuation perspective, a lot of these names are very cheap here if you believe oil prices stay anywhere close or even come in a little bit from where they are today.
What do you think? Brian, you agree? You want to be putting money to work here?
Oh, absolutely. I would be buying when the dips. The long-term fundamental picture for oil and natural gas are both very good. But between now and 2015, consumption is going to go up by 19 million barrels per day. To put that into perspective, we have to find 2 Saudi Arabias in the next 9 years to meet demand. I would be buying a lot of the Canadian oil sands companies. They have come down quite a bit off their highs. There are a lot of rumors of merger and acquisition activity. So yeah, I would be buying right now.
All right, we'll leave it there. They are buying right now in the market. Gentlemen, we will see you soon. We've got a rally underway on Wall Street with 45 minutes to go before the closing bell sounds.